Hello friends, welcome to Trade with Books. Today we'll learn the importance of moving averages. These are the famous moving averages. We'll learn one by one what is the importance of each one and how we can use in our chart for either for options or for swing trading. We'll use in a daily chart, but you can use the same things in 5 minutes charts for intraday and a weekly chart for a longer term trend. So first we'll start with the 5-day EMA. You can see we're going to discuss EMA as well as SMA. EMA is exponential moving average, SMA is simple moving average. So this importance of first one, the 5-day EMA, is that 5-day EMA shows strong momentum. So if you apply 5-day EMA on any chart and the price is above that 5-day EMA, you can see that it is in a strong uptrend or downtrend. So we'll go and apply on this thing in Nifty and we'll see how it works. So we have opened this chart in trading view. Now in indicator you have to add EMA because we are talking about exponential moving average. Later for higher time frames, bigger moving averages, we'll use simple moving average. So EMA in setting you have to go and change it to 5, and for a better view we'll change is the settings so that better clarity will be there. So now you can see that whenever price is above that 5 EMA, you can feel that very strong momentum is there. From here to here you can see price is never crossing the 5 EMA down. So it is very strong momentum. From this point to this point you can see this very strong uptrend is there. Like that, when downtrend was there from here, when it started, it was not breaching the 5 EMA for very long time. So you can be in that position. Suppose you have taken a option trade, like you have buy a put, simple put you have bought. You can decide that you will exit when this 5 EMA line will be breached, like a day will be closing above the 5 EMA, that time I will exit. So you will get a exit here. So you will ride this entire momentum. Now also you see the 5 EMA line is above and the price is going below that only. So you can decide whenever the price will give a closing above 5 EMA, I will get out. I will exit my trade. Suppose you are in a trade for a bearish direction. Here suppose somebody would have taken an entry, this candle, somebody would have taken an entry for a bullish entry. So now he don't know where to exit. With seeing this red candle, he may be afraid that whether I should be get down, because already price was going down from here. So it can again go down from this point. But if he is using some system like this 5 EMA, he can be assured and he can make a exit rule that whenever price will give a closing below 5 EMA, I will exit. So instead of exiting here, he can exit this point. So this much ride he will get. This is importance of 5 EMA. Especially in option buying, you need a momentum. When high momentum is there, then only you will succeed in option buying. So if you are a intraday trader, you apply this 5 EMA on a 5-minute or 15-minute chart, and with that you make some entry and exit rules. So whenever a strong momentum is there, suppose price is consolidating and after that one breakout happened, and here you have taken a call option, you have bought a call option. Now you don't know where to exit. You may exit early and that option would have gone to 3-4 times. So you can simply apply 5 EMA and you make a rule that whenever this 5-minute candle will give a closing below 5 EMA, I will get out. So this is one system you can make with 5 EMA. This shows very strong momentum. Okay, in daily chart we are talking daily chart. So daily chart is for swing trade, like for 1 week to 1 month, like that trade. So here 4-5 days continuous momentum is there na, when very high momentum, you can ride that momentum with 5 EMA. Okay, so next we'll talk about 10-day EMA. So 10-day EMA shows a short term trend. When a trend starts for a week to month, you can play with 10 EMA. So what we'll do, you have to apply 10 EMA in this chart. So this same EMA setting input you have to change 5 to 10. Now what I can see is from here to here, that price up to here, it has given closing above this. So up to here I can ride this momentum for when I am riding for a longer time, like for a month. So you can see almost how many days, suppose here you have taken entry, so you will get a exit up to here. 26 daily candles means almost 1.5 months you can be in your position without any worry, because you have decided that I will get exit whenever the price, whenever the candle, daily candle will close, give a close above that. Suppose now somebody would have taken the entry here when this candle has given below this closing. Now he can decide whenever the price will come and close above this EMA. This EMA will go like this. Price will come and close someday here. So here he can exit. Maybe price will just go on. It will cross after a long momentum. So he can ride this momentum. This is importance of EMA. Using EMA, it gives you some type of you can say assurance that you can be in position. Here you see after election when this price crossed this one and somebody would have taken entry even here also after this breakout happened, and he can decide that after 10 EMA will be breached, I will get out. So here you can see he would have exited this point, so this much profit he can get. Otherwise he would have be afraid this with this selling. And in weekly chart it works like magic. For any stock you convert the stock chart to weekly. I will show you one example. Suppose HCL technology I will take, which is in uptrend now. HCL technology chart we open and we change it to weekly, and now we have applied 10-day moving average. 10-day moving average, suppose here somebody would have taken entry, it has crossed this point, now somebody exited here, again entry, and it is, we are in the trade only. So 10 moving average, 10 period moving average works like magic in weekly chart. In daily chart, for a short term trend you can ride with 10-day moving average. Next is 20 period moving average, which shows you pullback support. Any uptrend, when goes, some pullback comes, this pullback support is 20-day moving average. So your 20-day moving average will be like this. So you can be assured that 20-day EMA is taking support, means uptrend is continuing. So you can apply this 20-day EMA on any chart and you can see that pullback it is taking support. Then next is 50-day SMA. 50-day SMA. Now we are talking about simple moving average. Earlier we were talking about EMA, exponential moving average. Exponential moving average takes higher weightage of the recent days, recent nearby days. Simple moving average, what it does is, it simply takes all closing prices, add that prices and divide with the number of days. That is simple moving average. So this shows uptrend defense lines. So suppose 50-day moving average is this one and price is going here and it breaches this one, means uptrend is gone. You should stop taking trade in upward direction until price is here. When this price will go here and it will again cross, then only you should take. For momentum trading, you should take entry only on the stocks which are above 50-day SMA. That should be your rule. You make a rule that I will not take entry in any stock which is below 50-day SMA. So how it works, suppose this is daily chart, so you have to delete this EMA and you have to add simple moving average SMA. And SMA setting you have to go and change it to 50. In your broker's terminal also you can do all these things. This is TradingView, best for charting. I have not got any money because they are such large that they will not give me any money. So here you can see it was below that 50-day moving average, it was below the price. Here if you would have taken entry, you would have ride this full thing, and here only you would have exited. Again it has given entry at this point, and again it is taking support to 50-day SMA, simple moving average. So 50-day SMA works like magic, and this shows momentum. So price is above that 50-day SMA, means you should ride it. 50-day SMA, it is above that. Okay, when it goes down, you stop investing or trading in this. Not for value investing. Value investing is a different field that will come to know with 250-day moving average. I will show you how to do value investing with the moving average help. But for the time being, you see that you have to be careful when the stock is below 50-day SMA. you should not take entry for momentum trading. This is the whole concept. Now 100-day SMA shows that a big price drop has happened, so that is the opportunity to see good fundamental stocks for a time being. 200-day SMA, you may have seen in all books from last 100 years, people talks about 200-day simple moving average. So if you have to ask me that which is the most important moving average, I will tell you 200-day simple moving average, which shows long term trend. That for a long term trend, now price is in uptrend or downtrend, that is decided with 200-day moving average, and Nifty has crossed 200-day moving average today only. So this is a very significant thing. So you have to in setting, you have to change it to 200. When we change it to 200, you can see last time it breached 200-day moving average in March 2023. Then suddenly, very soon it came above, it came up, means this point, if you would have started taking entry in good stocks, suppose you would have thought of a system that whenever price will come above 200-day moving average, I will take start entry in stocks, good stocks, fundamentally and technically good stocks for a uptrend. So you would have done a lot better, because price has never breached 200-day moving average after that. Okay, so now also price has come below that 200-day moving average. Even it has come once, gone up and given a, it was making a lower low, lower high, it breached 200-day moving average, crossed this high, and again it has come down. So this is a very good price action that shows that it will go down for a time being. Now whenever it comes up and cross 200-day moving average, again you can start taking entry in stocks, and even in Nifty ETF. This is the best time to invest in Nifty ETF, because ETF averaging you can do. Nifty ETF is also available in your broker's terminal in the name of Nifty Bees and Bank Bees. So these are the times when you should put some money in Nifty ETF. Your average price will be very good, and when Nifty will again start making uptrend, you will get a good returns. You should not take entries in such high points for ETFs, because these are already very high price of ETF. At such price, if you start an SIP in ETFs, this will give a good result. And also this is the point for investing in fundamentally good stocks. Okay, because this time they will be available in better price, bargaining price, margin of safety is available. So what you have to do, your plan should be that whenever price will go again 200-day moving average, you will start taking entry, and until unless price is below, Nifty is below 200-day moving average, you should stop momentum trading, because overall river direction is against, so your boat will not go far. Even though your stock is strong, like HCL Technology, you have seen that it was making a higher high, higher low, it was making a higher high, higher low, but when market is falling, this uptrend cannot sustain, and it may become sideways. It will not go down, but it will become sideways. So whenever price will again making higher high, higher low, and it will be about 200-day moving average, that time this type of stocks will fly, which are making sideways direction now. So that stocks you keep in your watch list and wait for the market to cross this 200-day moving average again. Now last one is 250-day moving average, which is very important for value investing, value zone. This is called value zone because in this zone, when overall market is there or any stock is there, that is the time for you to get a best price, like best price of that stocks are available. So suppose some fundamentally good stocks are there, which you know that this is temporary fall because of some temporary news or temporary market condition, you can start for a 5 year to 20 years, like very long period investing, value investing in such stocks. So one such stocks is like Asian Paint. So we'll see Asian Paint here. Nifty also, if you change it to 250, you will see that COVID time it was below 250. Then that Ukraine Russia war was there, that time it was below 250. So now also it has come very close to 250-day moving average. So suppose it went below that, You see here it has gone to below. Then this was the period where Nifty was for a long time below the 250-day moving average. This was that Russia Ukraine war time. So this you may be regretting to invest or put some money in good stocks in this time. So this shows that this is the time to invest or trade in or put some money for the long term in good stocks that will give you very high return. And such one condition was COVID time. So if somebody asks me that how you will know that which is the best time to put money, how much market will go down, so simply add a indicator that 250-day moving average, this one, and it will show whenever Nifty is below that, that is the time to put more money in market, because that will give you good returns. Not in PSUs, not in Tata Motor type of cyclical stocks, but in good fundamental stocks. Here you see this was the time to put money, and now again the time is coming. Maybe it should come, I am praying it should come. So we will get a good price for many good stocks. Like you see here when it will start coming, if it comes like this will be the time to invest, because it will again go up, it will again go up and it will fly. But when price is coming below that, that is the time you keep the good stocks in your watch list and take position when the price you will get. Suppose you like some stocks with fundamentals. Suppose you like a house to buy in a city, you know that this is very good location, this in 10 years this house price will be 5 6 times, and you have to buy. Suppose COVID comes, or suppose any situation comes in country, because of that, or with that whatever whoever has made that building, or somebody has purchased that building and he needs some urgent money, and because of that he needs immediate sale. So you are getting that flat in a bargain, in a lesser price. So what you will do, that is no like no thinking, you will go and buy, because you already have decided to buy that stocks, and that time these prices were very high. Now because of some reason that is available in cheap, so that is the time to buy. So that is same thing in stock market also. Suppose I know the Trent share, that who runs Judio and West Side, that is very good, and I want to purchase this one also, Asian Paint. So I will go and buy Asian Paint in such conditions. Okay, when this is below 250-day moving average, that is the best time. Okay. So all the best. This was the today's video. Next time we'll see some other topic. Somebody has come again. So with next topic we'll